please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello again, Kelly. Hello, everyone. Here's what's happening at this hour. Diplomats and activists gathering in Germany to iron out some of the technical details of the 2015 Paris Accord, which aims to limit global warming to 2.5 degrees Fahrenheit.
This conference really needs to make a very important step forward so that we can say in 1 year time that the Paris Agreement's structure is fully operational, that its impact can be enhanced.
Florida State University has indefinitely suspended its fraternities and sororities. It follows the alcohol-related death of a freshman pledge and cocaine charges for a member of another frat. The university president who made that announcement did not say how long that suspension will last. And a California auction house says a guitar Prince used in the late 1980s has been sold for $700,000. It was expected to sell for between $60,000 and $80,000. The musician died in 2016 from an accidental drug overdose. You're up to date. That's the news update this hour. Kelly, back downtown to you.
All right, Sue, thank you very much. Our Sue Herrera. Let's take a look at how we finished on Wall Street today. It was small gains, but still a record-setting day. The Dow up 9 points, the S&P up 3, the Nasdaq up 22. All of those new record high closes. The Russell up 3, but still shy of its high watermark. And the Priceline TrueCar conference calls started just a couple of after the bell. It includes those names. Priceline's down nearly 7%. TrueCar's down 27% right now. Red Robin's down 25%. Avis is down nearly 10%. All of this after reporting earnings earlier this hour. And if you missed some of the big other stories from the day, let's get you up to speed with today's Rapid Recap.
21st Century Fox has been holding talks to sell most of the company to Walt Disney, leaving behind a media company tightly focused on news and sports, according to people familiar with the situation.
Wilbur Ross is now defending his interactions with a shipping company that itself had business relationships with a company that was connected to Vladimir Putin's son-in-law.
A company not under sanction is just like any other company, period. It was a normal commercial relationship, and one that I had nothing to do with the creation of it.
A major purge of powerful princes and businessmen coming over the weekend in Saudi Arabia. The wave of arrests, including a very familiar name for investors around the world, Prince Alawid bin Talal.
We want a dramatically more pro-growth tax code where our companies, whether they're local or global, can compete and win anywhere in the world, including here at home.
Broadcom this morning put out an unsolicited takeover bid to acquire Qualcomm for cash and stock.
Qualcomm combined with Broadcom gives those companies a little leverage versus Apple and Samsung.
Michael, this afternoon, a lot of the oxygen has gotten sucked up by Disney and 21st Century Fox.
It has, without a doubt, but also along with the theme of this pent-up demand potentially for deals. I mean, we've kind of all remarked on the fact that it's been largely absent during this phase of the bull market, but it seems as if there's enough technological regulatory change getting to a critical level, and it seems like, all these things fit into that theme. Whether something happens out of Disney and 21st Century Fox, the market thinks something is on the move in media right now, the way the stocks are responding.
But now I feel like these companies almost have to move, because if they don't, to somebody else in media.
It's really interesting how you mentioned how Fox's shares up 10% built on. This is a stock that has a founding control family, right? You can't actually force them and put them in play, but the market says they ought to be in play. They've basically almost put themselves there.
All right, let's talk more about this now with Bill Smead. He's CEO of Smead Capital Management and a Disney shareholder, and Jeff Sonnenfeld, who's Senior Associate Dean for Leadership Studies at Yale School of Management. Glad you both could join us. Bill, are you a fan of this deal, potential deal, if it does happen?
Well, it reminds me a lot of Comcast buying DreamWorks, right? The companies that have a history of successfully manufacturing content are bulking themselves up, while the technology companies that don't have a history and have loads of money to spend are squandering theirs by just throwing it at the wall.
Jeff, there's been some speculation that this would be about bringing a CEO into Disney who could take over right now. Is that something that you think is in play here?
No, I don't think there's a succession agenda behind this at all. I think it's highly unlikely that Bob Iger's successor is going to be imported in from the 21st Century Fox world. I think this is entirely what Bill says it is, which is an incredible deal that the markets, the analysts we're hearing from are telling us it's still 30% undervalued if this thing goes through. That the content, the distribution opportunities, the consolidation, and Iger, there's no better media titan alive today, and perhaps he'll be one of those 2 or 3 greatest in history in terms of what he's woven together, but also what he's been able to execute. So that's what it's all about. And we often see people at this point in their career pull off some of their biggest and best deals. There's a lot of misinformation swirling around among analysts out there suggesting that people rarely do these swan songs.
Content Yeah, go ahead.
Go ahead. Make your point.
Content creation is woefully undervalued because it's anti-FANG. The assumption is that content creators were being attacked by the immense muscle of the Frightful Five, and in reality, creating local news through a network affiliate or manufacturing movies and television shows over the decades. Just ask Coca-Cola and their Columbia Pictures unit how easy that is to do for a non-expert and somebody that doesn't have it in a well-organized manufacturing operation.
No, you're right. There's no doubt about it. But just to get at that a little bit more, I don't know if the market is saying that these proven creators of content are now disadvantaged because they're not FANG. They're saying that the distribution model, the way they've been getting paid, is a little bit too skewed toward this cable bundle, which nobody really knows what the next phase of it is.
Scarcity creates value. If you create a hit television show like This Is Us, you are going to coin it for a long time. Modern Family, I think they're syndicating Modern Family in the middle of the night in Tanzania right now. So the bottom line is everyone thinks that the technology and the distribution is the most important thing in the game, and the truth of it is great content is what matters the most.
That's all. That is exactly right. This is not all about pipeline. Bill is exactly right. There's an awful lot here is about content, but on the technology side, these guys aren't knaves. I mean, Bob was obviously quite close to. Iger was quite close to Apple. He's got Jack Dorsey on his board, of course, from Twitter. He's got John Chen from BlackBerry. He's got Sheryl Sandberg from Facebook. Is that the technology, not to mention consumer reach that he has with the CEO of Nike and former CEO of Starbucks. This is an incredible board, and at this point in his life, he's doing the kind of thing that, you think Leonard Goldenson was at this point when he did the Cap Cities ABC deal. Tom Murphy, when he sold out Cap Cities ABC to Disney, was at this stage. Andrew Livers, before our very eyes, is at this stage in his career, and, Dal DuPont and Bank of America. Hugh McCall did this great swan song to create Bank of America at this point.
Yeah, I always wonder.
Interesting point. Last word, Bill, quickly.
Why aren't these companies like Apple and Google and Facebook and Amazon, why aren't they buying up these cheap content assets right now, especially the ones that have ridiculously overpriced common stock currency to use?
I think they hired some of the Fox executives even over at Facebook or one of the places. Anyway, it's a good point. Thank you both. Bill Smead, Jeff Sonnenfeld. I appreciate you guys talking to us about the biggest potential deal of the day.
And Iger's only 67, by the way. Murdoch has been CEO longer than Iger's been alive.
Wow. That's a crazy thing to think about. Thank you guys both, Jeff Sonnenfeld, Bill Smead. We have some Etsy earnings just wanted to get to here with Courtney Reagan. How'd they do, Court?
Hi there, Kelly. So we'll give you Etsy's third quarter headline earnings of 21 cents. It's actually not comparable at this point to analyst estimates. We're working on some exclusions for you, but the headline earnings, 21 cents per share for Etsy's third quarter. Revenues coming in slightly higher than analysts had been looking for. You can see shares reacting after hours, moving sharply higher. Etsy also reiterating its full year guidance for the gross merchandise sales as well as the revenue. They see revenue growing somewhere between 18 and 20%, and that is about in line with what analysts are looking for, which is, we should point out that the adjusted EBITDA margin is the highest since this company was publicly traded. They continue to grow internationally. 34% of the sales are now coming from international markets as opposed to 30 at this time last year. With 32 million buyers, that's up almost 17% year over year, and almost 2 million sellers. That's up about 11% year over year. Kelly, back over to you.
Thank you, Courtney. Etsy shares up about 4%, so that makes it and Weight Watchers bucking the trend of other decliners after their earnings this afternoon. Time for the takeaway now. We begin today with discounts brought to you by Amazon. The company is slashing prices on products that other vendors sell on its website to help make sure it has the lowest price on some key merchandise. It means the vendors still get their full cut, but it risks angering sellers' other platforms and alienating the very brands, Michael, that Amazon is trying to lure onto its site.
I guess what's the use of having dominant scale if you don't use it in this way? I mean, it's not, you know, when you say alienating the other sellers, that's Amazon's competition, right?
Will it alienate the third-party sellers that might sell across
multiple? If it creates more volume through, you know, they should be agnostic as to what platform, I guess, they get their sales from. So it seems to me it's just kind of the big player exerting whatever leverage it can going into the holiday season.
I imagine we'll see more of that, exactly as you say. Next, CVS will start delivering prescriptions next year. The company announced today it will be next-day delivery for most stores and same-day delivery in some major urban markets like Washington, San Francisco, Boston, and Miami. Again, Michael, can they fend off Amazon?
Yeah, here's the area where Amazon's power is only kind of notional and feared. It's not really in place yet, so we don't really know specifically what they're going to do in pharmacy. But yes, CVS has to kind of get a little more like what the potential threat is, like Amazon, if they want to compete here. Of course, they're trying with Aetna and all the rest of it. So, yeah, I do think that that's what they're all positioning to be prepared for.
Very strategic move there. And finally, Stitch Fix announced its IPO terms today. It plans to raise $190 million by offering 10 million shares in a price range of 18 to 20 bucks. At the mid-range, that gives the company a $2 billion market cap. But a lot of these high-profile IPOs, and Stitch Fix is one of them, have struggled while the more under-the-radar names have done quite well.
They have, and I do think that high expectations out of the gate have been, I think, a little bit of an issue, and an inflated private valuation has also been a headwind. This one, I don't know if it falls into that category. I don't think, this is not Blue Apron for clothes.
They've certainly been disciplined in terms of the amount of venture capital they've raised all along. It has not been as much as maybe it could have been. Maybe that's helped keep it from expanding.
All the deals that really did flop had one fatal flaw at the IPO that everyone was talking about, whether it's Snapchat, it's monetization, whether it's Blue Apron, it was attrition, it was the ability to hold on to customers. I don't know that there's an obvious one here necessarily, except just how often are people going to re-up for this kind of
T-Mobile and Sprint dragging down the whole telecom space today. You can see the declines there. T-Mobile down about 6%, Sprint down 11.5%. This coming after they abandoned their merger plans. Is there any room for another potential buyer to jump in now? Jonathan Chaplin is managing partner at New Street Research. And Jonathan, you've said previously you don't see good strategic alternatives for Sprint. So why was the CEO so determined on having control over this company, and what options do they have now?
So I'm not really sure, Kelly. I think it's a real pity that they let this deal fail. I think there was a tremendous amount of value to be created here. And somehow these management teams have failed their investors by not figuring out how to split up that value. It's a great pity. The options for another deal amongst the 4 wireless carriers, I think, are zero. But there are other deals that could come out of this. T-Mobile's going to need capacity from somewhere else now that they're not doing this deal with Sprint. There are a few options for them. Dish would be a good option. Cable would be another good option. It's, you know, I think it's going to take a while before any additional deals come out of this. For Sprint, it's a little bit more difficult. They've been trying really hard to get a deal done with cable companies, and they haven't been able to get anything done except this deal with Altice, which is great in a way, but it's in a tiny piece of the country. It gives them a cable partner in 6% of the country, which really doesn't amount to all that much. They spent 2 months talking to Comcast and Charter and didn't manage to get a deal done with them. And if they had, that could have been something that could have really moved the needle for them.
Jonathan, if you look at the market reaction to the failure of these deal talks, it seems as if the conclusion is, well, it's still going to be kind of a messy, competitive field in wireless right now, and everyone kind of downgrading the profitability of the entire industry for the moment. Is that the correct assessment, do you think?
I think that's exactly the correct assessment. We're stuck in a 4-carrier market going to 5 as cable comes in for the foreseeable future, which means it's going to be a really tough competitive environment for the next several years. I think that makes it really tough for everybody involved, principally for the incumbents, for AT&T and Verizon, who've been losing share. Amongst this bunch, T-Mobile's really the best position. They're the ones with the most operating momentum. They've been taking share. They've got expanding margins, but it's going to be a much tougher space going forward for sure.
Jonathan, AT&T shares are only down about 1% today. Verizon was down 4%. I'm curious why Verizon's hit harder and whether, if AT&T's content deal for Time Warner goes through, if that's the kind of deal making we could see more of from AT&T and Verizon.
So Verizon's 100% exposed to wireless. It's sort of more or less just a wireless company, which is why they're down more. AT&T, for better or worse, has exposure to pay TV through the DirecTV deal, and soon, hopefully, if their deal goes through, content through the TWX deal. So I'm not surprised by the relative performance, although, as I've said on this show before, all of AT&T's businesses are under pressure for different reasons. It's just today it's the wireless business that's taking it on the chin. And as for other deals, yeah, if Disney's going after, if Disney's going to do a deal with Fox, which I think makes a tremendous amount of sense for those two companies, I don't know what's left for Verizon to do in the content space.
And there we see AT&T shares down about 10% over the past year. Verizon, as you mentioned, at 4% today. Jonathan, thank you so much for helping to explain a lot of this. Jonathan Chaplin.
Thank you, Kelly.